Hello, FOP members. This is Joel Garris. I'm a certified financial planner and a certified financial fiduciary with Nelson Financial Planning, where our team of certified financial fiduciaries stands ready to help you change your life with a successful financial plan. I also happen to host one of the top 25 financial planning podcasts on the World Wide Web. So be sure and subscribe to us on your favorite social media or podcast channel of choice. On this video, we're going to talk about the top 5 moves that all FOP members need to make to put 2021 on a great track for your future. So let's begin. Number 1, start, hopefully not just starting, maybe increase the amount of money you put towards your deferred compensation 457 plan. The reality is that the money that you put towards this plan is a voluntary contribution that comes out of your paycheck. Those contributions are typically done on a pre-tax basis. So that means that you're going to get some tax savings as you make those contributions. What's particularly unique about a 457 or deferred compensation plan, like what you have with your employer, is that those plans allow you to access the money without an early distribution penalty. Like so many other retirement plans whereby if you access the money prior to age 59 and a half, there's a 10% penalty for early withdrawal. A deferred compensation or 457 plan does not have that on there. So it makes for a great option for you to be able to access money if you retire before 59 and a half, which of course a lot of you do. The reality is that that account is very unique in allowing you to access that money without that 10% penalty. So once you work, regardless of how old you are, you can access that money without that 10% penalty. And here's the reality, of course, as you know, the Florida retirement system, whether it's the pension plan or the investment plan, has certainly changed a lot over the years. For example, in the pension plan, there's no longer the COLA. With the investment plan, the contribution rate done by your employer is much lower than it was when the investment plan first started out. So it's more incumbent upon you to try and contribute to your own retirement, to beef up those FRS benefits as much as you can. So to really get the year 2021 started off, make sure that you are increasing, hopefully not just starting, but if you haven't started, make sure you're starting making those contributions in to your deferred compensation or 457 plan. Number 2 on our list of the top 5 is track your expenses. This is the best way to find out where your money is going and how you're spending your money. Once you find that out, then you may realize, hey, wait a minute, maybe I should be spending this money the way that I am doing. I might be better off taking that money, building an emergency fund, paying down debt, or maybe using that to start that deferred compensation account that we were just talking about. Bottom line, by tracking your expenses, you learn how much you're spending and how much you then ultimately have to save. It's super easy to do that now in today's world because there's a ton of apps that you can download to your phone, apps like Mint, that really allow you to track your expenses in a much more effective way than ever before. So make sure you download one of those apps and start tracking those expenses today. You may be surprised at how you wind up spending money. Number 3, confirm your beneficiaries. Look, this one is super important because there's a common misconception out there that whatever your will says, that's how your money is going to flow. The reality is that's not the case at all. What matters most is who you have named as beneficiaries on your life insurance, your retirement accounts, or anything that allows you to name a beneficiary. Whoever that beneficiary is, that ultimately is going to be who winds up inheriting that money, regardless of what your will says. So make sure there's not an X or something worse on that beneficiary list. Make sure you double check your beneficiaries across the board on all accounts. Next up, number 4, refinance your debt. This is an important move to make particularly now in the year 2021, because interest rates are at historically low numbers. The national average, we've never seen these rates this low before. The national average for a 30-year fixed rate mortgage in America today, at the end of 2020, 2.76% was the national average interest rate for a 30-year fixed rate loan. Stop and think about that. Under 3% for the ability to borrow money over a 30-year period of time. That's a tremendous opportunity if you're in the market to get a new house, or if you've got a house and you've got a mortgage on it, take a look at the opportunity to refinance that debt. Because if you do that and you drop your rate, then guess what? You're going to save some money. And by saving money, ultimately, you may find a better place to put that money. Maybe, again, building up that emergency savings account, paying down debt, or starting that deferred comp. And when you do that, if you are refinancing, make sure that you do it on a fixed rate basis, right? You want to take the advantage of these low rates and have those low rates stay with you for the life of that loan. So it's important to make sure that you get the fixed rate option for the entire period of that loan. So take a look at the interest rates that you're paying on your debt, whether it's your mortgage, whether it's your car loans, credit cards, whatever the case may be, and see whether there's some options to maybe refinance or renegotiate to a lower rate in terms of the interest that you pay. Remember, the interest that you pay, that is the cost. That is money out of your pocket. So anytime you can keep that as low as possible, that's always a good thing. Number 5 on the list of the top 5 things that FOP members can do to get on a good financial track for the year 2021 and beyond, it all goes back to the debt, right? Be sure that you are paying down or trying to eliminate your debt in the year 2021. Look, debt is a bad thing, right? If you owe debt on something, then you don't actually own that something, right? When you have a house and a mortgage, you sort of own the house, but the reality is that the bank's going to make sure that they get paid first. So anytime you can try and reduce down your debt, then certainly you want to be able to do that. And the more progress you make, the better off you're going to be, particularly if you go into retirement without having that debt in place. That means you're going to be able to use that cash flow for something else. So make sure that you're taking the time to really develop in the year 2021 the opportunity to figure out how to reduce down your debt. Of particular importance is if you've got debt that is sort of on that unsecured nature, the credit card debt, things like that. That's where you really need to focus first on, is eliminating that unsecured debt that has those highest possible interest rates. So take a look at how much you owe, what the interest rate is, what the monthly payment is, and then prioritize from there. Try and, like we said, focus on that debt that has the highest interest rate, because that's the one that's costing you the most. So there you go. There are the 5 things that you can do now as a FOP member to try and improve your finances for the year 2021 and beyond. Number 1, increase or start your deferred compensation 457 account. Number 2, track your expenses. Number 3, confirm your beneficiaries on all your accounts. Number 4, refinance your debt, take advantage of those low rates. And number 5, pay down or preferably pay off any debt you have. To learn more about these topics and much more, we ask you to subscribe to our weekly podcasts on our Nelson Financial Planning channel on YouTube or any of the other social media channels that exist out there. Certainly on the podcast channels, iTunes, Spotify, you can certainly find us under Dollars and Cents with Joel Garris of Nelson Financial Planning. So thank you very much for listening, and you have a great 2021 and stay healthy.